All right, everyone, looking at track here. So you can see from the weekly chart here that you're at macro resistance. You can see we had support here, and we're back at this price level once again. So that may be why you're getting stuck here. If we switch back over to the daily chart, I know there's a lot going on here, but it looks extremely bullish at the moment, according to everything on the chart. The Heikin-Ashi candles just started to print indecisive red there, so it doesn't know if it wants to go up or down at the moment, but more to the downside, of course. So you can see you did come all the way up here and came back and bounced at your 236 here at 37. You got rejected at 45, and you're coming back down at the moment. So if we go ahead and take our little thing here, you see where you wick to, bounce, got rejected. So if you come back down to 3.7, you want to see a bounce to the upside. But if you end up coming back down here like this and not bouncing, or bouncing and getting rejected once again at the 4.5 level, then you're going to end up coming back down here to the 3.82 and possibly even lower. Let's scroll back just a little bit. Yeah, if you end up losing 37, you're probably coming back down here to 29. So I know there's a lot going on the chart, all these squiggly lines everywhere. Let me go ahead and get these out of the way. So hopefully you understand what I mean by that there. What to really watch for instead of all those squiggly lines. Watch 378. If you hold that, you're still good to bounce and move higher, and eventually go. We'll look at that in 1 second. If you lose 3.7, 3.19 is your next stop for a 20% drop. And like I said, if you end up losing that, your last line of defense is pretty much the top here at 2.9. Pretty much 30 cents needs to hold for a 27% drop. So 27 needs to hold ultimately for this thing to either go sideways or potentially bounce and move higher at some point. You can see you're still over the 200-day moving average. You have the 50 and the 21 crossing over the 200, so that is a very good sign there. It looks like it wants to push higher, so just kind of watch this price here to hold this 30-cent area. As long as you hold this 30-cent area, you're still considered bullish or extremely bullish, in my opinion, to bounce and move higher. But remember, you are at macro resistance in this level here. So this 45 to 49 is your price to beat. Just imagine that as a little box there. We can go ahead and just draw one. So from 45 to 49, that's your price to beat. You get over this box, you're going to the moon. If you end up losing 37, you really need to hold 30 down here. If you lose that, this 29.30 level, that's your top, and you're coming back down to way lower prices. But like I said, you're over the 200. You look good on the MACD. RSI did come down from the overbought area, but you could bounce and go up at any time. But as of now, it looks bullish. So just watch 37, 8 to hold, 37, and then 30. And if you do, in fact, bounce and move higher, you can see our next target price is up here close to $1 at about 93. So you know what? We're just going to let me redo this. We're going to go from the 236. So if we do come down here and tag this high 37, 38 level and bounce, you're looking at about a 30% move to get over this 49, 50 cent area. You get over 50 cents on track, then there's nothing stopping you from coming up here for 147% to 93. So I know I said a lot there, but just kind of watch those prices. Watch 37 down to 30 to hold for support, and you're still bullish for a bounce and a move higher, or consolidation and then move higher. And as long as you stay over the 200-day moving average, it looks good to go. To just kind of slowly grind higher. The fact that your moving averages are still grinding up, it's taking the price with it. And a break over 50 cents. If we can get over 50 and hold this as support, you'll officially break that macro resistance level there, and then this thing's just going to start going. So I'll leave it at that. Spoke a little bit too much on it. Hopefully you understood what I was getting at. If not, just rewind the video. And as always, thanks for watching, everyone. Not financial advice. Peace out.